Welcome everybody. My name is Mao. Welcome to our channel. Hopefully everybody is okay. We will cover today my top 6 gold ETFs that I track, that I follow. I follow more than that, but I just wanted to cover the top 6 today in this video and do a little battle and compare it versus the market, which is the S&P 500, and gold itself, because we want to select ETFs that will give us at least the performance of gold, if not more than the performance of gold. So let's get started. So we're going to start with the gold chart here, and I added a little table to the chart that is going to be present from now on, where I compare the gold performance year to date and the S&P 500 performance year to date by tracking the ETF VOO, which is highly popular, used quite a lot by a lot of investors who want to invest in the market. They invest in the S&P 500, and a lot of people, especially in the US, choose VOO. So in order to do that, I simulate an investment of $10,000, buy it at the beginning of the year. In this case, it was the 2nd of January 2026, and look until today, 11th of April 2026, what has been the performance of that $10,000 investment. In terms of VOO, we have a loss of $55 during this period. There's no distributions. Therefore, the total return for VOO so far this year is minus $55 and a performance of minus 0.6%. Pretty much, the market has been flat since the beginning of the year. We have not lost money, but we have not gained money either. Now, gold per se, I do exactly the same exercise. Take $10,000 divided by the price of gold on the 2nd of January 2026 and look at its performance up until today. And in the case of gold, we have gains of $958. There's no distributions. Therefore, the total return is $958 for a return of 9.6%. So gold has gone higher and performed better than the market by 9% roughly. So if you invested in gold, you have a return of 9%. If you invested in the market, you have a return of minus 0.6%. We will compare the upcoming 6 gold ETFs to these benchmarks to see if we beat them or not. And if we beat them, by how much in the same period with the same size of investments. So let's start the top 6 ETF, gold ETF that I track with position number 6, and it is a Roundhill ETF, which is the ticker GLDW, which is the gold Weekly Pay ETF. You can find this information on the Roundhill website. You will get information of their holdings, performance, and all related information. But the thing that you want to know with these ETFs from Roundhill, this one in particular, it pays weekly, and the variation of distributions change from week to week. It's not constant. Second, they use 20% leverage to track a little better the underlying asset, in this case is gold, to the downside and to the upside. These ETFs go down more. Let's say if gold goes down 1%, this ETF technically will go down 1.2%. If the price of gold goes up 1%, this ETF is planned to go up 1.2%. It's not always on the money, but it gives you a rough estimation of what the ETF does with leverage. So always look into these ETF before investing in them. This is not investment advice. I'm just telling you what ETFs I am tracking, which ones I invest in, but I'm not indicating to you to buy, what size, or when. It's up to you to do that decision. Again, this is a weekly paying ETF with 20% leverage that follows the price of gold. This is the chart in TradingView. So we're going to compare it to the price of gold, to the performance of gold and the performance of the VOO. So GLDW, in terms of gain of losses in the price of the ETF, we have a gain of $119 for an investment of $10,000. The distributions that we get that are weekly, during this period, we got distributions of $918. When we combine the two, the total return for the ETF is $1,038. So that's a total return of 10.4%. So we're beating a little bit gold, and we're clearly beating the market. This is the characteristics of this ETF, and it's quite volatile. You see it in the chart that it goes up a lot, but it can also go down a lot. So if you don't like too many changes in prices, it may not be a suitable ETF for you. But this is the performance for pretty much the first 3 months. So January, February, and March. We just have 10 days in April included in this data. So this is position number 6. Now we go to the next one, position number 5. And here we have a Hamilton ETF, which is a gold producer yield maximizer ETF. The ticker is AMAX. This is an ETF that will maximize income from gold producers. Again, here my strategy is to generate income, extracting value from these ETFs, get them either weekly or on a monthly basis, and be able to deploy those distributions whatever way I desire within my portfolio. Let's have a look at the performance of this ETF. Again, the ticker is AMAX. We have gains of $1,068 for a $10,000 investment. We have lower distributions, $312, because this is a monthly distributing ETF. The total returns are $1,381 for a return since the beginning of the year of 13.9%. Slightly better. We are beating gold a little more, but clearly we are beating the market by 13%, which is quite good. So good performance for the Hamilton Gold Producer Yield Maximizer ETF. Number 4, we are going to use a Sprott ETF, and it's the Sprott Active Gold and Silver Miner ETF, which is, the ticker is GBUG, which is a GBUG. So this one I included even though it has a silver miner component because of its performance. So it is included in this list. Here is the performance of GBUG since the beginning of the year for a $10,000 investment. Gains of $1,424. This ETF does not pay distributions. So that's if that's a characteristic that you like, well, you see that we get higher gains, but no distributions. Total return is for $1,424 for a return over 14% at 14.3%. Now we're getting close to 5% more than gold, but clearly very close to 15% more than the S&P 500, than the market. So this is quite a good performance for a gold ETF, but keep in mind that it has a silver component. Number 3 now is the VanEck ETF. The ticker is GDX. It's the VanEck Gold Miners ETF. You can consult, you can pause the video and consult the website, look into it, look at the performance, the holdings, the strategies that they use. There's a lot of information on these websites, and it's important to take a look at that. So this is the chart of the VanEck Gold Miners ETF. The ticker is GDX, like I just mentioned. For a $10,000 investment, you get gains, potential gains of $1,584. This ETF also, like the Sprott one that we just covered, has no distributions. So the total return is $1,584 for a return above 15% at 15.9%. Now we are 5% above the gold per se in terms of performance, and above 15% compared to the S&P 500 performance. Quite a good ETF to look into. Then position number 2, it's the second Roundhill ETF. The first one tracked gold. This one tracks gold miners, and the ticker is GDXW. So it's the Gold Miners Weekly Pay ETF. Again, we get weekly distributions that are not constant. Sometimes they're high, sometimes they're low. We have a 20% leverage, same thing as the previous one. So this one goes up a little more when the price of gold miners go up, and goes down a little more when the price of gold miners goes down. So take a look into looking at this ETF. The performance since the beginning of the year of GDXW is slight gain of $96, but this is the one that has the biggest distributions at $1,523 since the beginning of the year for a $10,000 investment. The total returns are 1,620, and now we're at 16.3%. Again, beating gold and clearly beating the S&P 500. This is the ETF that I have selected in my portfolio, not financial advice. That's the one that I am using because of my focus on distributions. That's the main thing here in terms of selecting the ETF, but it also has the performance that we are looking for in an ETF. Disclaimer: I am not a financial advisor. This video is for educational and entertainment purposes only and should not be taken as financial investment or trading advice. All investments include risk, and you should do your own research or consult with a licensed financial professional before making any investment decisions. Invest at your own risk. Past performance is not indicative of future results. And finally, position number 1, the best gold ETF so far since the beginning of the year of all the ones that I tracked. I tracked more than I'm getting close to 200 ETFs that I track for their performance, their distributions, and their total return performance since the beginning of the year in all kinds of sectors to select the ones that perform the best. And because I have a gold section in my portfolio, obviously I track these ETFs. Number 1 position is the Harvest Agnico Eagle Enhanced High Income Shares ETF. The ticker is AEME, and this is the only ETF that is linked to a single company, which is Agnico Eagle, a gold producer. And you will see that it reflects also the performance so far. In this case, you need to know that this is a monthly paying ETF from Harvest, and the last distributions that is posted here is 35 cents per share that is distributed from for all the investors. For every share that you invest in AEME, you get 35 cents monthly. These distributions vary over time, but they vary less than the weekly paying ETFs. They can be constant for a few months, then go up slightly or go down slightly depending on the market conditions. If the ETF is going down, you may be subject to reduction in distributions. If it goes up, sometimes, and most of the times, the distributions increase for investors. And this is the performance of the Harvest Agnico Eagle Enhanced High Income ETF. Again, the ticker is AEME. It has gains of $1,726, but it also has distributions. They're paid monthly of $672 for a $10,000 investment. The total return is $2,398, and the total return is 24%. So it has almost 10% more performance compared to the previous gold miners ETF. But you need to look into two different things. This is a single company versus the previous ETF and all the others that we cover that follow miners or gold per se. So it's more less concentrated. It is impacted by many miners instead of only one. And this is only focused on one company, Agnico Eagle. So there's risks there. If Agnico Eagle obviously does well, the performance will be amazing. But if there's a problem with the company, this one will be impacted severely. In terms of the other ETFs, if one miner performs a little less, it may have minimal or less importance to the overall picture of the ETF. So it's just a matter of distributing risk here. But you see that clearly focusing on one company here did almost 10% better than the second position at 24% return since the beginning of the year. And that includes monthly distributions. I did not select it because of the single company factor, but also because I'm currently focusing on distributions. I want the highest distributions possible, and the number 2 ETF in the list gives me that. That allows me to deploy the distributions in other assets, in the same assets, on a weekly basis, also quite flexible. So this is what best fits me and my strategy. It may not fit yours. It may not be accurate for you or appropriate for you. So that's why it's not financial advice. But you clearly see here that we have ETFs that are either at 10% and up to 24% in terms of performance. Some have distributions, others have none, but 6 clear winners here in terms of ETFs that at least perform like gold, but clearly beat VOO, the S&P 500 during this period. It's good to have a portion of your portfolio in gold, in my opinion. In the next years is going to be quite critical. That's what I believe. I'm not telling you to do exactly as I'm doing, but the debasement will happen, and there's going to be all kinds of instabilities in the world. And I think the safe haven role of gold will be important in the upcoming years. So that's why I have selected to have a portion of my portfolio in gold assets. and that's why I am invested in these ETFs. So I hope that this list has helped you. Look into a few, go into the websites, go look into it, compare the performance. It is important to combine the gain losses of the ETF in terms of share price change in combination with the distributions when they have it, to be able to compare these ETFs one versus the other. If you look at the chart, it's not useful enough. You have to look at the distributions in combination with gains and losses to really evaluate each of these ETFs. That is very, very, very important. So keep an eye on that, and hopefully you'll learn something today. If you enjoyed the video, hit the like, hit subscribe, add questions in the ETF, share with me other gold ETFs that you're using in your portfolio, if you're using any of them, and why you have selected those ETFs. I may have missed better performing ETFs in the field of gold. So I'm open to new ideas and somebody sharing their ETF or their favorite ETF and why they are using it in their strategy. So happy investing, everybody. Thank you again for watching till the end of the video, and I see you in the next one. Ciao, ciao.